Hi everyone, welcome to our channel. In this video, we'll dive into the key investment options: stocks, bonds, mutual funds, and exchange-traded funds, ETFs. Whether you're new to investing or looking to expand your knowledge, this video will provide the tools and insights you need to start building wealth. Investing is the act of allocating your money with the expectation of generating a return. It's putting your money to work for you, instead of letting it sit idle in a savings account. The two main asset classes are stocks and bonds. Stocks, also known as equities, represent ownership in a company. When you buy a stock, you become a shareholder, with the potential to profit as the company grows and its stock price increases. Stocks offer higher returns than other asset classes, but they also come with higher risk. Bonds, on the other hand, are essentially loans that you make to a government or corporation. When you buy a bond, you're lending your money, and the bond issuer pays you interest in return. Bonds are generally considered less risky than stocks, but they also typically offer lower returns. In addition to individual stocks and bonds, there are investment vehicles called mutual funds and ETFs. Mutual funds allow you to pool your money with other investors and access a diversified portfolio, managed by a professional. ETFs are similar, providing diversification, but they trade on stock exchanges like individual stocks. One key advantage of mutual funds and ETFs is instant diversification. By investing in a broad range of securities, you can reduce the impact of any single investment performing poorly. Diversification is crucial for managing risk in your portfolio. Another important concept is active versus passive investing. Active investing involves actively managed funds, where the manager tries to outperform the broader market. Passive investing, on the other hand, simply tracks a market index, like the S&P 500. Both approaches have pros and cons. Active investing can potentially offer higher returns, but it also carries higher fees and risk. Passive investing often provides a more cost-effective and low-maintenance approach. Your time horizon is a crucial factor to consider when investing. Generally, the longer your timeline, the more risk you can take on, as short-term market swings tend to even out over time. For long-term goals like retirement, a more aggressive allocation with a higher percentage of stocks may be appropriate. Another key concept is risk tolerance. This refers to your ability and willingness to withstand the ups and downs of the market. Some investors embrace volatility, while others prioritize capital preservation. Determining your risk tolerance will help you build an investment portfolio that aligns with your personal comfort level and financial goals. This could involve a mix of stocks, bonds, and other asset classes, tailored to your specific risk profile. As you start to build your portfolio, consider asset allocation: how you divide your investments across different asset classes. A more aggressive allocation may suit long-term goals like retirement, while a conservative one is better for shorter-term needs. Finally, I want to emphasize the importance of diversification. By spreading your investments across a variety of asset classes, sectors, and regions, you can help reduce the overall risk in your portfolio. This is because different investments tend to perform differently under various market conditions. Now, let's dive a little deeper into the specifics of these investment options. Stocks are perhaps the most well-known asset class. As a company grows and becomes more profitable, the value of its stock typically increases, allowing you to sell it for a profit. However, the stock market can be volatile in the short term, with frequent ups and downs. Over the long run, though, stocks have historically delivered average annual returns of around 7–10%, significantly outpacing the returns of bonds and cash. This makes stocks a popular choice for investors with a longer time horizon and higher risk tolerance. Bonds, on the other hand, are debt securities that represent loans made to governments or corporations. The bond issuer is legally obligated to repay the loan and make the interest payments, making bonds a less risky option. This stability and predictability make bonds a popular choice for more conservative investors or those with shorter investment horizons. The trade-off is that bonds typically offer lower returns than stocks. The interest payments from bonds are usually lower than the potential capital gains from stocks. Mutual funds are investment vehicles that pool money from many investors and invest in a diversified portfolio of securities. Professional fund managers research, select, and monitor the securities in the portfolio, providing a level of diversification and management that would be difficult for individual investors to achieve on their own. However, mutual funds do come with fees, which can eat into your returns over time. It's important to carefully research and compare the fees and performance of different mutual funds to find the ones that best fit your investment strategy. ETFs, or exchange-traded funds, are similar to mutual funds in that they also provide diversification and professional management. But ETFs trade on stock exchanges like individual stocks, allowing you to buy and sell them throughout the trading day. ETFs generally have lower fees, are more tax efficient, and provide greater transparency into the underlying holdings. Whether you choose to invest in individual stocks and bonds, mutual funds, or ETFs, the key is to build a diversified portfolio that aligns with your investment goals, time horizon, and risk tolerance. By combining different asset classes and investment vehicles, you can create a well-rounded portfolio that has the potential to generate strong returns while also managing your overall risk. Remember, investing is a long-term game, and the key to success is to stay disciplined, patient, and continually educate yourself on the ever-evolving world of finance. I hope this overview has given you a solid foundation in the basics of investing. If you have any questions or would like to dive deeper into a particular topic, feel free to leave a comment below, and I'll do my best to help. Investing can seem daunting at first, but with the right knowledge and a well-diversified portfolio, it can be an incredibly powerful tool for building wealth over time. By understanding the fundamentals of stocks, bonds, mutual funds, and ETFs, you'll be well on your way to taking control of your financial future. So what are you waiting for? Take the first step towards financial freedom and start investing today. I'll be here to support you every step of the way. That's it for now. Don't forget to subscribe and to put a like if you want to help this channel grow. Thanks for watching, and I'll see you in the next video.